Hello ladies and gentlemen, I'm Joseph Novichkov, Senior Trading Manager with GDM. Today's outlook, we start as usual with Asian shares. They advanced on range-bound trade on Wednesday with Japan's Nikkei 225 index clinching an 80-year high. The Bank of Japan's meeting minutes released today signaled growing optimism about the economy, so we now have a situation where economic conditions are improving in Japan. And of course, officials are still happy to maintain an ultra-accommodative stance. This, of course, is fueling the liquidity trade, and equities are clear beneficiaries. The Tokyo bourses edged up to its highest level since December 1996, supported by signs of a recovery in the world's third largest economy. Following a relatively calm morning session, China's Shanghai Composite Index was hit by another wave of extreme volatility in the afternoon session, falling briefly into negative territory before closing up more than 2%. Now we're focusing on the land down under. Australia's S&P 200 index ended near the previous day's close, after banking heavyweights such as Australia and New Zealand's banking group, as well as National Australia Bank, trimmed their gains. In Europe, the European stocks market opened slightly higher on Wednesday as hopes grow on an interim fix that will stop Greece defaulting on its debt repayments. The Pan-European STOXX 600 index traded 0.25% at the market open. On Tuesday evening, Greece's government seemed confident of getting a debt deal with lenders throughout Parliament, despite the protests by left-wing groups in Athens and anger from some of its own members. A meeting of the Eurogroup of Eurozone finance ministers to discuss the revised crisis plan is due to start Wednesday evening. We're now focusing on the commodity sector. Over there, gold slid to a one-week low on Wednesday, down from a fourth consecutive session, as the dollar strengthened and, of course, global stock markets continued to rally on expectations of a Greek debt deal. Gold has absorbed a lot of bad news recently, and of course traders are now wondering just how much lower the market is likely to go. Physical demand in emerging markets still appears sluggish, notably but not exclusively in India, an important gold-consuming country. This opens the way for lower prices, but we think declines may be quite modest. Gold fell 0.1% to 1176.7 an ounce in Asia trade after losing 0.6% on Tuesday. It hit a session low of 1175.45, weakest since June 17. Oil prices in the energy sector edged higher in Asia trade on Wednesday on hopes for stronger than expected US crude demand, while of course doubts over the prospect of reaching an agreement next week on Iran's nuclear program eased over supply concerns. US crude for August delivery gained 12 cents to $61.13 a barrel after rising 63 cents the day before. US crude inventories have been at historical highs, but the thing is, crude inventories may have packed after oil demand picked up in June. US oil demand would rise to 19.41 million barrels per day this year, up from 19.03 million barrels per day last year, the US Energy Information Administration said in a short-term energy forecast on June 9. The American Petroleum Institute, however, forecasted on Tuesday that US commercial crude oil stocks fell by 3.2 million barrels last week, larger than analysts' expectations of a 1.5 to 2.1 million barrels draw, and the eighth straight week of declines. The US Energy Information Administration will release official stockpile data later in the day. In today's calendar, we're focusing at the most important news. This is the US GDP report coming out at 12:30. That's all for me. Thanks a lot for watching. See you next time.